When it comes to your retirement, the mortgage on your house, and your income, these are huge life-altering subjects. Robin Loomis and Glen Smart, the smart team of Nova Home Loans, are here to really dive into these matters and help you. You guys, thank you so much for coming back.
Thank
you.
Our pleasure.
And I always say every time you come, I learn more, and I am going to one day be able to speak like you guys and act like I know what I'm talking about, but I need you guys to help me, and I'm sure a lot of people at home as well. And I was learning some stuff even right now before the interview started. I said, we're going to talk about something called a HELOCs, right? Kind of tell me what that is.
Well, you know, it's Financial Literacy Month, so we want to make sure that we educate. So thank you for giving us a chance to do that. Some of the options that people have as seniors when they need money is to use a home equity line of credit, or a standard second mortgage, if you will. They have that as an option, but they also have the reverse mortgage line of credit. And there are pros and cons to both. You know, most people don't understand if they take a home equity line of credit that has an adjustable rate of interest and it requires monthly payments. And at some point, that balance is going to come due and payable. And with a reverse mortgage, they can use the line of credit feature, have no monthly payments required, and that loan will never come due as long as they live in the house as their primary residence.
So that is the difference.
It's one of the biggest differences, yes.
And it is. You guys come here and you guys teach me so much. And I was, you know, thinking about everybody and where they're at in their parts of their life, I guess. And so I'm hearing that 80% of people are actually not available for retirement for 20 years. They're not prepared for that. Is that true?
Yeah, it actually is. So many of us go into our retirement years thinking, oh, I'm only going to live a certain period of time, or I've got enough money, and things happen. You know, the stock market, or a pension or retirement they thought, or the job they thought they were going to keep longer isn't going to be there. Well, now the reverse mortgage gets to step in for them and help them finance their retirement, giving them a monthly payment for a set period of time to get them through a period, or for a lifetime, or lump sums of money. So the reverse mortgage can step in and take care of that need that they thought they might have had covered, but they just didn't. And this fills that really big need.
It is, and that's such a big percentage of people that this is going to be impacting. So then what do I do to prepare? What can I do to not be that person in that position?
Well, Tina, one of the things that we suggest is to make the reverse mortgage part of your financial plan. And when you do that early and you do that with a financial planner, you can use it as a tool. One of the things that we've found is that people that take a reverse mortgage early in retirement and just leave it available as a line of credit have a much greater chance of having their money last all the way through retirement, because there's a growth rate associated with it. If you don't use the money, it increases in value. So if you start early and just let it sit there, it's like one of your other investment tools. This thing will be available to you later in life and give you much more of an opportunity.
I love that you said that. It's like an investment tool, and this is something we can be thinking about as early on as possible, and we hear all those great benefits. But some people are living maybe off Social Security only right now. Are those people in that pocket that also qualify for this reverse mortgage?
Most of our clients live just off of Social Security, statistically. And absolutely, we can look at the overall financial picture and see if the Social Security income is enough. Most of the time it is. We do have to look at the overall picture and see what they've already obligated themselves to on other debts. But so many people look at this and say, I've got this short amount of money. Can I get a mortgage? And then they look at traditional financing because it's what they're used to. But the traditional financing, they have to make a mortgage payment. They have to traditionally qualify for it, which can be really, really hard when you're on the limited fixed income, where the reverse mortgage takes into account a whole different look at this and says, well, yeah, we don't expect you to be making monthly mortgage payments on this, so we're going to make it a whole lot easier to qualify. So we just ask them, give us a call. We'll be happy to walk them through it, make sure it does work for them, their overall financial picture and qualifications.
And I tell you, if you guys can explain it to me and I can understand, you guys are going to do a wonderful job explaining this to anybody that has questions. And you kind of touched on this a little bit earlier about us just living longer and, you know, not expecting us to be able to financially make this money last. Does that come into kind of a part of what everybody's dealing with and kind of later in life?
Sure. Actually, using the reverse mortgage early, it gives the biggest benefit. But if you wait, if you're older before you take it, that's okay. Because the older you are, the more money you get with a reverse mortgage. So there are a lot of different tools. One of the strategies for Social Security is perhaps deferring the start of your Social Security, using the reverse mortgage to pay your bills, and then gaining an 8% return on your Social Security benefits by waiting. So there are a lot of different things to do. And we'd like to suggest that you just consider this as part of your financial plan.
Okay, and we're using words like a financial plan or investment tools. And when I think about assets, I think maybe my 401k or my savings account or things like that. Your home, does that not fall into that category as an asset as well?
Oh, it absolutely does. And this is one of the things I love to share with my seniors, is to be able to show them. You're used to being able to go to the bank or your financial planner and say, yes, I need a certain amount of money out of my 401k, my stocks, bonds, IRAs, any of those assets. Well, you put that money in there every month, right? Nobody else did that for you. Well, that's the same thing as a mortgage. You went ahead and paid your mortgage payment every single month, or maybe even bought it in cash.
Yeah.
And now that's your asset. It's just not liquid. So we turn it into a liquid asset for you to be able to show you now you can retrieve that money on a monthly basis or lump sums. But it's the same thing as any other asset account. It's still yours. You still give it to your kids or your beneficiaries upon your passing. No one takes it away from you. Just like your 401k, your stocks, your bonds, your IRAs, that's yours. And then your estates. Same thing with the house.
Robin, that was a light bulb moment, I think, for a lot of people when you put it like that it's an asset. You put your money in. It's just like all of those. That light bulb is what we want everyone to kind of feel. I'm going to remind them how they can get a hold of you, because I'm sure people have all these questions just like I had for you today. And I'm already feeling a little bit smarter just sitting down with you guys. So thank you once again.
A pleasure.
Now, for more information about reverse mortgages, give them a call at 790-5900 or visit smartteamhomeloans.com.